Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nikki Mirchandani. Bears seem to be in control for fourth consecutive session. SGX Nifty at this point of time though is mildly indicative of a positive start for the broader index. Well, Dow dips and S&P 500 somehow managed to close flat after Mastek gains and Netflix drag. Tesla ended more than 5% lower after the profits missed expectation. Asian shares edged lower for second consecutive session. If you talk about the FIIs, they've been sellers. They've sold shares worth around 13.17 odd crore. DIIs also have offloaded shares worth 110 odd crore. While in trading triggers that we have for today is HCL Tech, ICICI Prudential Life, Scient, and Laxmi Organic Industries. These are some of the companies that will be reporting their quarterly earnings. TTK Healthcare is expected to consider the proposal for voluntary delisting. Iron Exchange, that is going to be considering a stock split, so do keep an eye out on that one. And Adani Ports to consider debt buyback on April 2022. Beg your pardon, on April 22. But let us get going and discuss some stocks and strategy today with Chandan Taparia, Head Technical and Derivative Research at Motilal Oswal. Good morning there.
Good morning. Thanks for having me.
Pleasure is all ours. Chandan, I'm going to start off by asking about your assessment on Nifty right now. Looks like bears have tightened their grip in absence of any positive trigger, muted global cues. What do you make out of it? Do you think, bulls will make a comeback anytime soon?
I think bulls and bears both will fight to keep the market in their party, but I think it's likely to be more of the consolidative nature. In last 3 days, we have seen some decline. Just 3 days back, it made high near to 17,863, and yesterday it retested 17,579. So as of now, we are trading inside the trading range of Monday, but with slightly decline. I believe that 17,442 to 17,777, 17,800 is the broader range. But for immediate point of view, we can use the support of 17,570 to place some bounce towards 17,717 marks.
Sure. Also, your strategy coming in on Bank Nifty along with 3 profitable bets for our viewers out there.
Yeah, so like Bank Nifty is comparatively better if you look at the Nifty in this week as of now. Your expiry on expiry, week on week basis, your Bank Nifty is flattish, but Nifty is down. If I look at the price setup of the Bank Nifty, it negated the formation of higher lows, but is still respecting to the multiple support of 42,000. So I think any dip towards 40,000 could be buy with support of 41,750 for a bounce towards 42,600 to 42,750 marks. Now looking at stock wise, I'll focus on one auto name, that is TVS Motor. The stock has given a breakout from pole and flag on the monthly chart, retested the support zone, turning up with bullish candle. So with support of 1147, one can look at target of 11, 12, 10 kind of level. Apart from that, few metal stocks are in focus. So in metal, we'll focus on Jindal Steel. This stock has seen positive price action with volumes. Surpass is following supply trend line. So with support of 566, stock can head towards almost 605 kind of level. So TVS Motor, Jindal Steel are two names. In third, I can look at the Polycab. The stock already moved up, but will suggest to buy a small dip. So I think these are the couple of names one need to focus in F&O space to get some positive or setup with relative strength.
Sure. These are the bets that Chandan has suggested this morning. Chandan, we'll get back to you and speak a little bit more about the metal counters because they're expected to be in focus today, given there are a slew of reports and data emerging out of China. But we'll first address the top movers of the day, which have been the newsmakers, and we'll be addressing something in the likes of metal companies, Concor, AU Small Bank, ICICI Security and Mastek, amongst others. Let's talk about aluminium companies first, something in the like of Hindalco, Nalco and Vedanta. They're expected to be in focus. Alcoa has reported Q1 number where the company, now it's a global company that we're talking about, aluminium company. The net loss is around 231 million, beg your pardon, versus profit of 469 million. This is the comparison that I'm talking about, year-on-year basis. If you talk about the sequential basis, the losses have been to an extent of 395. So sequentially, you would see the net loss actually narrowing down, but a YOY, you would see the difference out there. If you talk about the revenue, it's at 2.7 billion versus 3.3 billion dollars. So clearly you're seeing that uptick coming in terms of both YOY as well as sequential basis too. You're seeing an uptick. Adjusted loss stands at 41 million as compared to the profit of 577 million that was seen in the previous year, and $144 million that was seen sequentially. Now losses have also, for that matter, narrowed down for Alcoa. EBITDA at 240 million versus 1.07 billion dollars YOY. So there is an expansion in terms of the EBITDA too when you talk about the sequential performance, and even in terms of the YOY performance out there. Alcoa, in terms of outlook, suggests that the shipments are expected to remain unchanged between 2.5 to 2.6 million ton. So that's some of the outlook coming out there. Decent set of numbers coming in for Alcoa. So do keep an eye out entirely on the aluminium basket per se. Also, let's talk about the CLSA report on steel sector, where CLSA says that it prefers JSPL and Tata Steel, and they're suggesting this because of the pickup in China demand and soft coking coal prices, which could drive a re-rating for China Steel at least. If that were to come true, then that's probably something that we need to look back at home as well, right? Metal companies have been shining bright for past consecutive few sessions, if I may so say. There's a mixed outlook, but overall, if you talk about the macro situation, they seem to be improving. Spot steel spreads are up by $40 ton. Then the Q3 levels, that's sequentially higher, and the estimated consensus is implying a profitability expansion by $50 ton from Q3. Likely to see some cuts in the consensus estimates, that's what CLSA says, in the next few weeks. However, the quantum of the estimate cuts will hinge on the outlook for coal prices. So do keep an eye out on the entire metal pack, be it the aluminium, be it the steel. We are going to be looking at it all. Morgan Stanley on AU Small Bank, where they maintain the overweight rating and the target price of around 835. RBI has granted authorized foreign dealer license, which is expected to be positive because it's expected to boost the fee income over medium term. They project the ROE to improve by 17% to 17% in the next 2 years, from 15% in this financial year. Strong earnings compounding also should support the valuation. I'd like to talk about Concor upgrade, which is coming from Goldman Sachs. It is upgraded to buy, and the target price is to 720. Right now, the stock is quoting at around 600 rupees. It's based on three things. That is the valuation in terms of the market share and also the earnings CAGR. It says that the company right now commands a 70% market share when you talk about the overall India's rail logistic. It expects a 15% earning growth in the next 3 years, FY23, FY24 and FY25. So next 2 years with a healthy cash generation. It also talks about the valuation, which is currently at discount as compared to the long-term median valuation. So it's currently trading at 22.4 times, and the long-term median multiple is around 25 times. So stock is trading at discounts, market share is big, earning potential is bright. So these are the three things that the brokerage has highlighted. Let's talk about the earnings out there. ICICI Securities has come up with number. Top line performance, a flattish growth out there. In fact, revenue have come down by less than 1% though, but nevertheless, that's the estimate, meeting pretty much what the estimates were. If you talk about the EBITDA growth profile of the company, operational performance, we've seen down and out by 3%. The consensus was around 379, but the company has reported a number of 547. So that's a big one coming in on the ICICI Securities. So clearly it's a beat coming in on the operational performance of the company. Margins to some extent has seen some amount of contraction, 61.9% as compared to 63%, but then the consensus was to an extent of 42%. So clearly we're seeing good set of numbers when we talk about the operational performance. Net profitability down and out by 22%, but still pretty much in line with what the street was estimating. So revenue seems to be in line. Bottom line seems to be almost in line, if not for a big miss. And operational performance is where the beat has come in. The company has also recommended a final dividend of 9.25. Mastek is another one that we're looking at. IT complete basket is in flavor right now. Mastek has reported fairly decent set of number. Revenue up 7%. This is more or less in line with what the estimates were. In fact, the estimates were around 672 crore. The company has reported 709 crore. EBITDA is up by 10%. The consensus was for a number of around 116. The company has almost reported 125. So in sync with what the street was estimating, right? So no major miss coming in on that one. Margins and 17.7% in line with consensus. And the profitability figure too has improved by 8%. So these are some of the companies that we broadly would be looking at and are expected to be in focus. Do remember the fact that even HCL Technologies will be reporting its numbers in today's session, and remains to be seen. With that, the entire pack, will be in focus, because we've seen some major losses coming in already for IT companies, and whether or not now mid-cap IT companies will throw a different trend per se, at least for this quarter, remains to be seen. And today's session will give a direction to that momentum per se. But Chandan, I'm going to come back to you before addressing the market. For metal companies, something like Tata Steel, what do you make out of it?
Yeah, so we witnessed some attraction in metal names. However, Tata Steel has bottomed out recently, but momentum is missing. Even from last 4 days, it is struggling near 200 and 807 marks. So bias is positive as supports are shifting higher. I believe with support of 106, this stock has again potential to move towards 112, 113 levels.
All right, so that's the view coming in on Tata Steel. We'll address the market opening for you in a jiffy here. We're expecting some amount of somewhat cautious undertone, but remains to be seen if market per se can hold on to that, or bulls can make a slight comeback. 3 consecutive sessions we've seen some losses coming in for the markets. Probably, as Chandan was indicating, it's more of a consolidatory trend that we're looking at. So that remains to be seen. How does the market stack up right now? We'll be addressing the opening just in a jiffy for you. In the meanwhile, let's look at Bank Nifty and Nifty Index. How is that stacking up? Nifty 50, we are looking at a flat opening coming in for the markets right now. Pretty much lackluster trend, muted global cues, absence of positive triggers seems to be pretty much weighing down on the performance. We aren't getting any kind of support from Bank Nifty, but the good part is that it's not really surrendering to selling pressure as well, which makes, because of which the losses have been capped to an extent. In terms of the sectoral indices, which we can also look at, Nifty IT Index, we're seeing a flat bias out there, flat momentum with negative bias. Nothing sort of a day even for IT sector overall. If you talk about the other sectoral indices, something like metal, right, we indicated some amount of traction building in, but remains to be seen if we can see more amount of traction. We'll later come back to metal also to see how the 5-day performance has been overall for the metal pack before we address the other sectoral indices. Auto index out there, that's the one which is shining bright for you. We've seen some amount of gains coming in on that one. 0.1% of gains coming in for the auto basket overall. And if you talk about the pharma index, that's where the losses have come in from. 0.5%, almost nearly 0.5% gone out on that one. FMCG index, flattish bias, flattish trade at this point of time with some amount of positive bias coming in for the FMCG basket overall. And if you talk about the infra show right now, with the pre-election year being in the offing, these companies seem to be a little bit in flavor right now. In terms of the other sectoral indices that we have, of that matter, top gainers and top losers, Nifty Energy is holding up for you. Advances 26 and declines 21. Adani Ports, that's the one which is going to be considering in the debt buyback. So that remains to be seen. Ultratech Cement, there is a development even with Ultratech Cement where the company has increased the capacity of its grinding unit. So do keep an eye out on this one. This is to 4.7 MTPA with successful commissioning of 2.2 MTPA with a brownfield expansion. That is why you're seeing that gains out there. BPCL, Asian Paints and Titan. These are some of the other top gainers that we have overall on the list right now. And if you talk about the other gainers that we have on the list, M&M, L&T and JSW Steel, like we indicated that, you can expect metal companies to be in favor right now because of the macroeconomic data, which is suggestive of positive spreads coming in for the companies in terms of expansion. Losers, Apollo Hospital, Divi's Lab and Cipla. So you have the entire pharma basket, which is basically down and out. SBI, HUL, and Hindalco. So it's actually the aluminium companies which has taken it, which is one of the top losers out there. And in fact, losers, we also have something in the likes of Tata Steel and Coal India. So let's just pull up something like a JSW first and then Tata Steel, just to understand how these metal companies are behaving. We've seen significant amount of traction building in for both all the metal companies out there, be it in the likes of JSW, be it in the likes of Tata Steel, just to see how is it stacking up in today's trade. Most of the positives seem to be, factored in already into the stock prices. But how the momentum is overall stacking up, that remains to be seen. JSW Steel, we're seeing some amount of gains out there, and Tata Steel, right, like the charts pointed out, was one of the top losers out there. So you can see the difference between the metal pack, right? JSW Steel versus Tata Steel. If you can also pull up something like in Hindalco, Nalco and Vedanta, because Alco has reported a fairly decent set of numbers. The losses almost narrowed down for the maker out there. So something of Hindalco was one of the top losers that we had in our list. Nalco also is something that we'd like to keep an eye out on, because these are two companies basically which are very rate sensitive when it comes to the overall aluminium prices scenario. Hindalco down and out with 0.2%, and if you talk about the Nalco, that is also something which is more, the EBITDA sensitivity is more to the global aluminium prices that we have for Nalco. Nalco is also trading down with loss, not a significant one, but we are seeing some loss creeping into these names right now. But Chandan, I'm going to come back to you and ask you about what do you make out of something like a Hindalco. Sure, we spoke about Tata Steel, which is one of the top losers that we have on our charts today. But how do you want to look at something like a Hindalco, Nalco, Vedanta, for that matter, these aluminum companies on charts?
Yeah, so we talked about Jindal Steel, and when you talk about Hindalco, actually the Nifty metal is not that much weak comparatively. So I believe that supports are intact. However, momentum will be missing, but with support of 420, stock and slow and steady head to us 445 to 450 marks.
All right, so that's the word coming in for Hindalco and also some of the auto names per se. What do you make out of it? You already spoke about, I guess, TVS Motors, right? Something like a Bajaj Auto for that matter also. How does the chart look like?
Yeah, Bajaj Auto looks strong. In fact, the positive price setup is clearly visible here. So I think with support of 4,200, one can play the move towards 4,500 level in Bajaj Auto.
All right, so that's the word. And also, Chandan, we're seeing some amount of traction building in the real estate names. Suntex Realty also is expected. The pre-sale bookings seem to be strong even for that one. Do you see a significant upside momentum coming in for Suntex Realty?
So when I talk about this counter, the stock is bottoming out, but major momentum is missing. On monthly scale, it is continuously making lower top, lower bottom. So I need a stability beyond 310, then only I can understand the trigger towards 333.
All right, that's the word coming in even on Suntex Realty. Chandan, thank you so much for taking out the time and speaking to us this morning. All right, that's part of the show where we address the fundamental side of the story, and to join us to take the discussion forward is Rahul Arora, CEO, Nirmal Bang Institutional Equities. Good morning there, Rahul.
Morning, Nikki. Thanks for having me on your show.
It's always a pleasure. Rahul, let's just first chat about the IT companies. Mastek has also reported some amount of decent numbers, if I may so say. Do you see any kind of contract or any kind of different contrast between the IT companies and the mid-cap players per se?
So I think it's a very tricky call to take as things stand right now, because I think if you look at the two larger companies, TCS and particularly Infosys, I think the worrying part, Nikki, is that the US hasn't even started going into a slowdown or a recession. A lot of these issues that the banking system had with the SVB and some of the other banks, they were towards the back end of the quarter. And in that backdrop, you had such poor earnings that were reported by IT companies. So I'm just a little circumspect on, how things will progress from here on, if incrementally the US does go into a slowdown. Of course, Infosys did have a very large fall on the day of the results, and my sense is that the commentary will be relatively subdued on most of the IT companies, which would be large and mid cap. But I think the time to buy them would probably be 6 to 9 months down the line, is my sense, at least 6 months down the line, because I think there'll be a little more visibility that the IT companies will have once they report their first quarter results somewhere in the middle of July. And that would give us some sense of how the US economy is also doing. So at this point, from a portfolio allocation perspective, I'd say probably stay underweight IT. Mid-cap IT would be a clear avoid for me, because I think even in some cases like Persistent or some of the other peers, of Persistent, I think the valuations are actually at a premium of almost 15 to 20% to the large cap IT companies. So I think if there are disappointments there, the falls could be actually far more pronounced than what you're seeing in the larger names. So I think best to stay a bit cautious right now. It is an export related sector, and if the world is going to go into a slowdown and you are going to have some sort of collateral damage, the likes of which you've sort of seen with SVB and others, probably prudent to stay away for the next 6 months or so would be my sense.
All right, Rahul, point well taken, because the mid-cap space is right now more vulnerable given the kind of vendor consolidation, and even the word of shallow or a shadow recession in the US will probably be enough to kind of weigh down on the financials of at least mid-cap players more, because of the I think that the integration or the focus that they have on select geographies and the clients per se. But also, let's talk about the gold finance companies, something like Manapurna Finance and all of that. They've come off from the peak seen in November 2021, but in the last 1 month, when the market did not do anything, these were some of the companies which actually managed to eke out some gains. How do you look at the overall space?
So I think if you look at the two listed companies, Muthoot and Manappuram, I think Manappuram is a little more diversified than Muthoot, because I think Muthoot's book is still, I think, 90% plus gold. But I think that number for Manappuram over the years has come down as they've gotten to housing finance, LAP, and vehicle finance. So it's a slightly more de-risked portfolio. Obviously, when you do have a little bit of a sentiment kicker with gold prices rising, there is a bit of sentimental positive or negative, depending on the way gold prices move. And sometimes you may see a little bit more of an effect on that on Muthoot, because it's predominantly a gold player. I think both of these companies, Nikki, enjoy very good return on equity. I think they're around 20% return on equity. The return on assets would be about 4.5, 5 times. So you were talking about a 4-5 times leverage. And for entities that are probably going to be growing at about 15-17%, I think the valuations are not that demanding. If I had to pick one of the two, I'd probably be Manappuram right now, because as you rightly said, I think gold has moved up to beyond $2,000 as well, and our own sister concern, Nirmal Bang Commodities, has a view that gold may probably see a little bit of a resistance around 2150, 2200. So there's probably not too much of a headroom in terms of gold prices the way we see it, and that could have a resultant slight bearing on the way Muthoot's stock price performs. But just because the product portfolio on Manappuram is a little more diversified, and they're managing their asset quality on the non-gold book as well, whether it's LAP or vehicle finance or home loans, I think that might be, for the return ratio profile, a slightly better pick to do if you were to take a call between Muthoot and Manappuram. I'd say go in for Manappuram.
All right, Rahul, I would also want to understand from you the entire expectation that you have coming out from RIL and ICICI Bank, because these are the two heavyweights which will be coming out with earnings over the weekend, right? Which will probably give direction to the markets right now. Last 3 consecutive sessions, we're witnessing some amount of consolidation playing out for the markets after the sharp up moves over the last 9 consecutive sessions of uptick. What do you make out of it? What are your expectations?
So I think on ICICI Bank, it's a very critical name in the banking sector, because I think at this point, it's the most over-owned stock in the banking sector. So I think there'll be no room for disappointment. That being said, I don't think we're expecting any disappointments. I think it should be a fairly steady state quarter for ICICI Bank. I think they've managed the corporate book very well over the years. I think if you look at their advances and deposit growth, they're managing to hold out, in that 15, 17, 18% kind of number over a period of time, which is good. I think the bank is today far more retailized than it was, say, about 5 or 7 years back. I think the cost to income ratio has also come off quite dramatically for the bank, and you're seeing that in the kind of earnings growth that the bank has been reporting. I still don't think the valuations are extremely demanding if you benchmark it to HDFC Bank, for example. So I still think there's a case for ICICI Bank to be held in the portfolio, perhaps even added even at these current prices. So it'd probably be an overweight for us within the banking sector, and technically it is already an overowned stock on the institutional side, but I'd say there is no reason to change that positioning as of right now. On Reliance, of course, it's a sum of the parts. We've seen what's happened with crude, but I'd be more interested to see how the other businesses also shape up. Of course, you've seen a huge coming off of GRMs in this particular quarter, but I think for the fourth quarter reported, they should have seen the benefit for the better part. I think they continue to gain market share on the telecom side, so no concerns there. They're managing to hold on to their ARPUs. The retail business, which is now a relatively profitable business, I think the operating cash flows are doing extremely well and are funding the expansion on their own. I think all in all, there is no reason to be circumspect on Reliance. I'd be a buyer even at this price. I think, Nikki, these are not stocks that are bought for one quarter's results, right? I think these are structurally very large companies. And I think if you're very comfortable that they're going to continue to compound at about 15%, you'll keep paying them the kind of valuations that there are. Don't forget, Reliance actually had a 10-year consolidation, and after that, it actually broke out. So, if they continue to deliver, I don't see why the stock can't potentially be moving higher. So from a portfolio standpoint, they'd both be buys for me, and I'd continue to hold both of them if I was already an investor.
All right, so that's the word coming in for Reliance overall, 10 years of consolidation, and do not see a reason why the company cannot break through after this. But Rahul, we're just going to leave it at that, and thank you so much for taking out the time and joining us this morning, please.
Thank you so much, Nikki. Thanks for having me.
Pleasure. All right, but you guys don't go anywhere, because you can catch the first glimpse of Apple Store in Delhi. We're going to be having a live programming for it at 9:40, and I assure you it's going to be a visual treat for all of you out there. But with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. For rest of the updates, stay tuned in to moneycontrol.com and Moneycontrol app.